All right, time for today's three-stock lunch. We are trading a big mover, a big call, and a big earnings report. The mover is Boeing. The share's up 3% today, adding to its recent gains. The stock up 15% over the past week. The call is OKTA. Guggenheim says the software stock is, quote, too compelling to ignore. And the earnings report is Take-Two Interactive. Its results after the bell will tell us if gaming can withstand a possible recession. With us, Matt Maley, Chief Market Strategist at Miller Tabak. Why don't we start with Boeing? Quite a nice move for a long beleaguered stock over the past week or so.
No question, Tyler. And it's like you said, long before even before the pandemic hit, this stock got knocked down in 2019, and the issues are still out there in front of it to a degree, but they're starting to make some headway there. But it's one of these stocks. We have companies we always talk about being too big to fail. Boeing isn't too important not to succeed. I mean, we only have two airplane manufacturers in the entire world, so that we need to keep them around. Plus, of course, the world is not so safe right now, and they are an important defense contractor. So the government wants to help them out. But also on the technical side of things, the chart is looking very interesting. It made a nice little double bottom here over the summer and in the fall. This rally here is taking it above its 200-day moving average for the first time in a while. It's a little overbought near term, but if this stock can get above that 140 level, that's going to really help the stock break out. And for long-term investors, again, a stock that it's too important not to succeed, it's one you want to hold for the long term.
So, Matt, let's talk OKTA next. The stock is down 80% this year. Is it oversold?
There's no question that it's oversold, but the one thing I got concerned about, it's also cheap. We have it at 3.6 times recurring revenues, and that's good. The one thing I worry about, though, is of course we still have the Fed tightening their policy, and these technology stocks, if they do, even though they have some nice revenues, don't have any earnings. And it's just tough to get these stocks to really act really well if they don't have earnings. And I just think there are other names in the technology sector. I know you've been talking about Google or some of the big cap tech names having a tough time, but it's the cheapest it's ever been, tied with the cheapest it's ever been. I think there are other areas in the marketplace that, even though it's oversold and cheap, that I'd rather have my money in when it comes to the technology sector.
All right, let's move on to Take-Two Interactive, which is kind of unlike a lot of stocks, sort of just been tracing a kind of gentle, flat line for much of the summer into the fall.
Yeah, it just got hit. It got hit hard, but it was mostly in the spring. And it's like, as you mentioned, it's been trading sideways. Now, it is getting oversold on a near-term basis, so that's helpful. And, of course, they have their earnings coming out. And one of the things we do have to be worried about here is that, they had this merger with Zynga. We'll see how that's progressing. We want to hear about that. But, it's interesting. The NBA is getting a lot. It's early in the season, but, boy, it's getting a lot of notice this year. And they have this new product, the 2K23, which is they expect good orders out of that. So good bookings, out of that. So we'll be looking to see how those look. And then, of course, Grand Theft Auto, which has been unbelievable for them for many years. They're coming out with Grand Theft Auto 6. If that can be good at all, it's a stock is so oversold. I think it'll give us a good bounce. It's one I want to wait till I see the earnings. If it gaps higher, that's okay. It should have a lot of room to run. So I like that one more on a short-term basis, Boeing on a longer-term basis.
All right, Matt, thank you very much. Matt Maley, we appreciate it.